I don't have a whole lot of experience in trading options, but it is one of my passions that I've developed over the last couple of years, and certainly Locking Your Success has been a huge part of that, and it's really helping me to kind of see that I'm on the path to my objectives, and I just can't be more excited about something that I've encountered and just being a part of this community, and learning and trading well at times, and experiencing the ups and downs, and being able to share experiences with everyone else and seeing that they're having the same ups and downs that I'm having, and that this is all normal. And but at the end of the day, I mean, the goal is to kind of stay in the game and make money longer term. And so you see that playing out, and it's been pretty rewarding year from that standpoint. This is about risk management. I mean, what we do and how effective you will not be successful if you do not manage your risk appropriately in this business. It's just the market it'll get the best of you if you don't do that. If you don't take high probable trades and get paid to do them. If you're not getting paid to take these trades, you're not going to stay in the game long. And so I think I brought that mindset to this, but I still had a whole lot to learn about trading, volatility, and I mean, drilling down to that second, third, fourth level that really, John, I mean, you go through when I start joining you. It's not just about, it's getting away from that long only mindset. Like, it's just direction. It's not just direction that we're talking about. Direction matters, but it's volatility and the technical analysis, and we're trading volatility in our option income trading, and having an expectation for that, and not just ignoring that. And so you really kind of brought me to that second, third level of understanding, and not just being ignorant to what's driving the profitability in the trade. And it's not just necessarily being right about direction, but it's those other things as well. And knowing, having an expectation for volatility, and then positioning yourself to take advantage of that expectation. And if it doesn't play out, the risk management comes in, you move on, you recognize that early, and you get into something that is going to play out. And so I think, I tend to be pretty patient, and that's something that, I think the trades that have gone bad for me is that patience. I never wanted to be someone who just overreacted on trades and like out of fear.
Right.
But sometimes, when you start feeling like you're in a trade and you're just banging your head, and you get down on the trade immediately, and then you're scratching your way back to, break even. I mean, those are warning signs that, like, look, you just need to trade it a different way. You jump out of this, don't fight it, right? Get into something that fits what the market is doing. And then, define what your control points are, whether it be, your technical analysis, and use those to help you, to give you an indication that, yes, I may need to shift if the market does what we don't expect it to do here, because it kind of doesn't fit my expectations, as opposed to just blindly following a set of rules that are kind of agnostic to what is going on in the market. It's just, if your goal is to be consistent over a longer period of time, that's one of the initial themes I got from you, was you're going to have to be adaptive.
It's like you're skiing, right?
Yeah.
You're going to go skiing, and you don't bother checking the market conditions. You just look at the date on the calendar and say, I'm going to go skiing today. And you don't know if the ski area is open. You don't know if there's snow on the ground. You don't know if it's 3 below zero, right?
Yep.
You just
assess the landscape and adapt. Like, I know I'm not going to be really good in -3 degrees. So and plus I'm pretty tired from the previous 2 days. Hey, it's time to sit out a day. Yes, exactly. Right. That's the market. But 2 days ago we were going to be skiing today, right? And so that was the plan, but we adapted the plan, and that's trading.
Exactly. But you have that information available to you. Why wouldn't you use it? And this is, I think it's a big lesson for a lot of us, that we want to trade non-subjectively, only by probabilities. But the reality is, without the probabilities, yes, that has some validity to it, but without knowing your circumstances or situation, you don't know what your real probabilities actually are.
Yeah. And one of the things that you have preached before that's hit home with me is, like, these guideline-based trades, like, you are being subjective, whether you recognize it or not. And so it's better to recognize that, hey, I am being subjective with this guideline trade. And do I really want to be this way, given what my expectation of the market is? Do I really want to just ignore what the market's doing? I mean, they work for periods of time. I mean, all the trades that you teach, I've followed them for a long. They work they have their, but it's gonna be somewhat boom and bust, but over the long time, you're gonna have a consistent P&L, curve, but you're gonna have periods of time where you're gonna have to take some pain.
Right.
And
Some of us may not.
and some
Some
people
of the
will change the way that they trade when they take that pain. Like, and they won't,
right.
and so it gets them all. It's not that that's a bad thing to take some pain. You're going to have that, but to the extent that it impacts how you trade, or you just like jump and just throw that strategy out because it's not working right now and never go back to it, that you're doing yourself a disservice, because you just need to keep all those tools in your toolbox
Right.
and go get them when you need them.
Exactly. Don't let the bad times throw you off your game. Right.
That's right.
And the other thing
Yeah.
is, some people may not understand what you mean by, if you're trading a guidelines, non-subjective trade, that you're actually being subjective.
Rules. I mean, I think inherently I don't know who would not want to be in a trading strategy that's fairly easy, that you just follow a set of rules. There's really no gray. You just, when it does this, you do that, right? That sounds like a great way, and you're making money consistently. That's very little effort associated with that. I think you say this too all the time, is that the human instinct is to want to do something that's easy, right? With the most reward.
That's sure and easy. That's right.
Yes, sure and easy. So I think we gravitate to that and that's what gets, it's good, because that's what gets a lot of us into this. But I think the sooner you can recognize that it's really not about those strategies, it's about me as a trader, and me identifying when I want to use these types of concepts and when I want to use these types of concepts, and when I just want to maybe not be in the market. We're in no man's land, and just give it a little bit of time to kind of give you a higher probability situation, and then apply that, and so I've learned a lot of that perspective, and a lot of that's been this year,